Hello, listeners. Welcome to the Pre-Market Update. The podcast is autonomous and powered by AI. I'm Joe.
And I'm Sarah. Today is January 30th, 2026. Let's dive in.
We're looking at a cautious start for the Indian domestic markets this morning. If you're tracking the GIFT Nifty, it's currently signaling a weak opening, trading around the 25,435 mark. That's a significant discount of about 100 points from the Nifty Futures' previous close. Yesterday, the Sensex and Nifty 50 ended on a mixed note, but the underlying sentiment is dominated by two things: the upcoming union budget and the surprise announcement regarding the India-EU free trade agreement. In terms of FNOQs, we're seeing some nervousness as the rupee hit an all-time closing low against the dollar yesterday. While pre-budget anticipation usually brings some buying, the global cues are acting as a heavy anchor. Keep an eye on the heavyweight Nifty 50 stocks, especially in the IT and banking sectors. Analysts are expecting a range-bound session today with a lot of stock-specific movement. If the Nifty slips below the 25,400 support zone, we might see some accelerated selling. However, the positive sentiment around the India-EU trade talks could provide a cushion for specific sectors like auto and textiles.
Moving to the international stage, Joe, it was a volatile night in the West. Over in the U.S., the Federal Reserve decided to hold its key interest rates steady in the 3.5% to 3.75% range. This led to a split performance on Wall Street. The Dow managed to eke out a small gain of 0.1%, but the Nasdaq was hammered, closing down nearly 172 points. This was largely due to a massive software rout. Investors are growing wary of the massive AI spending budgets being reported by tech giants without seeing immediate, equivalent returns. In Europe, the FTSE and DAX followed a similar cautious pattern as the ECB looks set to keep rates on hold well into next year. Over in Asia this morning, markets are trading mixed. The Nikkei and Hang Seng are digesting President Trump's latest comments about naming a new Federal Reserve chair tomorrow. Meanwhile, the big story in commodities is gold. Bullion has breached the $5,500 per ounce mark for the first time ever, a massive 3% jump as investors rush to safety. In the currency markets, the dollar is flexing its muscles, which is putting that extra pressure on the rupee we mentioned earlier.
Now, let's zoom in on the big Indian corporate stories. The headline act is undoubtedly the India-EU free trade agreement. The big news here is that India has agreed to slash import duties on European cars. This is a massive shift for our long-protected auto industry. We expect to see significant price action in Nifty auto stocks today. Think Mahindra and Mahindra, Tata Motors, and Maruti Suzuki. While it opens up competition, it also lowers the cost of high-end components. Our second major story revolves around the pre-budget anticipation. Markets are buzzing with rumors of potential fiscal policy shifts to boost rural consumption. We're seeing increased delivery-based buying in FMCG giants like ITC and Hindustan Unilever. Additionally, keep an eye on the banking sector. With the rupee at record lows, the RBI's next move is under the microscope. Large-cap banks like HDFC and ICICI are likely to face some volatility as they balance global outflows with domestic credit growth.
On the international business front, we have to talk about Microsoft. It was a historic day for all the wrong reasons as the company lost $357 billion in market cap in a single session. That's the steepest plunge since 2020. Even though they are leading the AI charge, investors are spooked by the sheer scale of capital expenditure. It's a classic case of the software complex being repriced. On a brighter note, Delta Electronics has surged to a $100 billion valuation, even topping Foxconn. They've become Taiwan's second biggest stock, driven by the insatiable demand for AI server parts. And we can't ignore Apple. They reported a 16% jump in revenue driven by staggering iPhone demand. However, the stock didn't fly as high as you'd expect because management warned they still can't secure enough chips to meet the surge in demand. It seems the chip crunch is still a very real ghost in the machine for the world's most valuable companies.
Looking at the broader economics and geopolitics, the world is waiting for Friday morning in Washington. President Trump has confirmed he will name the replacement for Jerome Powell as the Federal Reserve Chair. This is a massive macro event that could redefine global interest rate trajectories for the next 4 years. Closer to home, geopolitics is playing a role in trade. Trump has reportedly warned the UK that it's very dangerous to do business with China, just as Prime Minister Starmer tries to mend ties. For India, this tension is a double-edged sword. On one hand, China's trade surplus has hit record highs despite tariffs, partly by using other Asian manufacturing hubs. On the other hand, the China Plus One strategy continues to drive FDI toward India. We're also seeing Chinese bonds bounce back as their banks deploy excess cash, which might draw some emerging market funds away from Indian equities in the short term.
To wrap things up for our investors today, here are the key takeaways. First, expect a gap-down start for the Sensex and Nifty based on the Gift Nifty's 100-point discount. Second, the IT sector is likely to remain under pressure following the Nasdaq software sell-off. Keep a close eye on TCS and Infosys. Third, the auto sector will be the one to watch for news-based volatility due to the EU tariff cuts. Fourth, gold is the king of the mountain right now. With prices over $5,500, gold-linked stocks and Manappuram or Muthoot Finance might see increased interest. Finally, the Trump factor is back in full swing. With a new Fed chair announcement coming Friday, global markets are in a wait-and-see mode, so keep your positions light and watch those support levels at 25,400 on the Nifty.
That wraps up today's update. I hope you gained useful insights to navigate the markets today.
Add your thoughts in the comments and follow for more such updates. This is Sarah
And Joe, signing off.